Hi, I'm Peter Rose, founder of Longwood Currency Trading. Having issues extending your lot size beyond about 3 lots, that's where you can start to need to change your thoughts about trading. 3 lots, that's 3 full lots, and it's not trading at 200 to 1 or 100 to 1. If you are trading at 100 or 200 to 1, don't watch my channel, because that's just, you got a gun to your head. Eventually it'll catch up to you. But 3 lots is an easy lot number to trade with, and it provides enough income to make the trading, worthwhile. I've said many times, I ask people, how much money would you need to make on a yearly basis in order for the trading to make sense to you? And I think if you could make if you're making even $50,000 a year and you were able to make $10,000 on your trading, I mean, that's a 20% increase. Your boss isn't going to get you, give you that kind of an increase in your money. Yeah, 10,000 isn't a lot of money, but it's a start. I mean, I don't even start my students out with that goal in mind. It's pay your light bill with a small, a couple of $1,000 a year. Let's see if you can get the consistency to do that, because if you screw things up really bad, you don't want to lose a lot of money. You want to learn from your mistakes, but you don't want the mistakes to clean your account out. I'm just talking to you about risk management here. And when you get to the 3 full lot position, your risk management corollary rule needs to come into place. And I usually don't address these kinds of things in my videos because I'm trying to help those of you that are in that low to mid 5-figure account size, trying to get things going, but you're not having the success that you should be having. So if you're trading more than 3 lots and you get jammed up, but you don't know what you're doing, and you have 3 mind screws, 6 mind blanks in a row, and I mean, you're going to lose a lot of money. You're going to lose a couple of $1,000 just like that. You have to manage what you're doing with the amount of lots that you're trading with a reasonable expectation. So that's why when I start working with somebody, you start on a $1,000 account trading 1 mini lot, because then the math becomes easy. What I do with 1 mini lot, I can do with 1 full lot. And what I can do with 1 full lot, I can do with 3 fulls, I can do with 8 and 10. It's just moving the decimal point and then changing the magnitude of the bank that you're trading to get more lots at that level. But primary to that is your risk management all the way through. If you're taking small lot positions and just pushing them around for shits and grins because you're not paying attention to what you're doing, you'll be really fearful when you start shoving 7 or 8 lots around. You're 70, 80 bucks a pip, shoving 7 and 8 lots around. So you got to really be careful. You take a 10 pip hit and you're $1,000 out. So you got to really watch out what you're doing. Trading up to 3 lots is pretty easy. Now, if you've been watching any of my videos, then you know that trading itself isn't easy, but it can be made to be simple. What becomes difficult is managing your risk management from an emotional standpoint. And you don't have those issues when you get up trading around 3 lots. Not around 3 lots, when you're trading 3 lots or less. But once you hit that 3 lot point and you go to 4, I mean, what are you going to do? Go to 3.3 lots? That's not how you build good metrics. It's not how you build trading. Those are tactical things that you can do when you get better, but that's not how you use them. That's not how you employ them. There are folks out there that are teaching you to do that. Oh, I got $1,000 and now I got $1,100, so I can trade, 2 mini lots on that, or 2.2 mini lots, and then I can make another $100. I can put 2.3 mini lots, or whatever the thing is. It's just crazy. You spend more time doing calculations in your head than you do trading. That's why I'm saying that you're not going to be trading 3 lots unless you have some experience. And if you have some, you're not going to get to the point where you're even going to be willing to risk the money that you need to trade 3 lots unless you've got some pretty good idea of what you're doing. Now, a lot of the folks that I talk with that are in that, they're trading 3 to 5 lots or something like that, and they're just not having the success that they want to have. Their losses aren't catastrophic, but their gains aren't matching the amount of money that they're putting at risk. You can be profitable, but not profitable enough. And so if just because you're making money doesn't mean that you're successful or that you're consistent in making that money if that money is such a piddly percentage against the amount of money that you're placing at risk. If you have a $20,000 bank and you're trading 2 full lots on that, you're putting $20,000 at risk. I mean, that's $200,000 of currency that you're trading, but it's $20,000 to trade 2 full lots. You look at balancing. Oh, I've got $20,000 that I've traded these 2 lots, and I've made $50. Okay, do the division, $20,000 into $50, and you come up with a with a really crappy percent return against your risk for that trade. Now, sometimes you have to do that because things go wrong. I was just in a trade this morning, and it was going badly against me. I'm not trading big lot sizes right now because I took a really bad hit. So I've gone back down, and instead of trading 20 lots, I'm back down trading singles and 3 lots and stuff. So just trying to get back on my footing. But so the price was going in my favor. I had probably about a 1.25%. The position was ahead, and I'm watching it. It took a bad turnaround, and I just got out, and I made 0.3% on my risk. Now that 0.3%, maybe that's $30, and you had a $500 profit. And so, but you got out. You saved from going negative. Your entry simply was not incorrect, but the probability that you thought that the thing was going to run so that your particular position was going to be $800. That's about around where your take profit point was. But it fell back to 500, and it was floating around. You had plenty of equity in the position to let that go, and then all of a sudden, down it comes. You hit the close, and you're out, and you make 0.3%. But you made 0.3% on that. If you're looking to make $800, you're probably trading 20 pips. You're trading a $40,000 account or something like that. So 0.3 was at $120. Well, that's great if you're trading that size, because some people don't make $120 in a day. You have to look at things proportionally to what you're doing, and you have to look at times where when it does go against you and you hit a 10 pip stop or 20 or whatever the stop is that you're having, and you hit that stop and you go, ugh, because it's a lot of money. That's about where that trading at the 4 lot or 5 lot comes in. Trading at 3 lots at a 10 pip stop is $300. You want to go out to a 20 pip stop, okay, so you're 600. But that's manageable. If you've been trading that and your win-to-loss ratio is pretty good and your average win value overcomes the losses, the number of times that you do lose, well, you're in great shape. And that $300 loss, that's just part of playing the game. If you didn't take your stop at the 10 pips, and that's what you put the stop there because that's all the heat that you wanted to take. But this time you take a 20 pip loss, and now it's 600 and your balls crunch up. Well, then you're trading too much because you're taking too much risk when you shouldn't be, because you're not good enough to judge your entry analysis, right? And so when I talk with people at the advanced level where they're trading 8, 10, 15 lots, or learning to do that, you're down in the 3 to 5 lot position, and so I'm setting the stage for you when you get to the 8, 10, 15 lot positions, sizes, as to say, well, how are you sizing the initial number of lots that you go into trade? And the answer to that is the same thing that you have to establish for, if I could only make X number of dollars a day net, then over the year period of time, if I traded 200 days and I was happy with $10 a day, which would be trading one mini lot, you just multiply that out. I'd be making $200 on the mini, $2,000 on the full. And so there's your light bill. There's the $2,000 for your light bill, $10 a pip on maybe a 10 or $15 a pip on a daily basis. $10 a day, 200 days, $2,000. So if you had that one full lot, you're going to have to make an average win value of X multiplied by your win percent. Maybe you're a 60-40 trader, so you take that dollar value and multiply that by 60, and then you take what your average loss value is, and you multiply that by 40, and that's your 100 trades, and there's your number. Multiply that by 2. Now you've got what you're going to make over the course of the year, because that's the 200 trading days that are available for it. That's the math behind all this stuff. And I don't mean to beat the thing to death, but if you don't know how to do this, or the person that's working with you doesn't know how to phrase all this stuff, you're going to get yourself in a jam really quick, because your trading plan is not complete unless it constitutes where are the jump points where you're going to have to be really aware of your emotional state. And I'm just telling you that if you've worked your way up to trading, so you're at the trading about the 3 lot level, and you're saying I got a 10 pip stop, I'm taking a 300 pip loss, or maybe you're comfortable with a $600 loss, that's fine. That's all up to you. All I'm saying is that at that 3 lot level, you're comfortable because you're consistent and you can see the gains that you're making. So stay there at that level for a while until you have a large enough sample size, maybe 30 or 50 trades, not a very big sample size, but I mean it's a starter. And so if you took that number of trades and divided that into, or divided the profit that you've made into that number of trades, you'd get a number. So multiply that times 200 trades, and is that enough that you need to make for the year? And if it isn't, then you can't afford to go up in lot size, nor can you afford to try to get more pips, because you're not getting the consistency and the dollar value out of your trades that you should be doing, that your trading plan is telling you that you need to get in order to reach the goals that you set. But this is a really complicated topic, and I try to do the best I can on these videos, and it's the best I can do. If you have a specific question, I'd be happy to answer that. You send me an email, tell me a little bit about yourself so I know where you're coming from, how long you've traded, what the size of the bank is, what your issues are, and all that kind of stuff. And then tell me what the issue is. And I'd be happy to try to either work with you through email very quickly, or if I think I can really get something done in a short video call with you, I'd be happy to do that. But if you're in the midst of these transition points, I'm getting to 3 lots and I'm not getting the amount of money that I need, and how do I do that? that's not something that you're going to be able to answer in 30 words or less, or giving you some basic concepts, because there's more to it than that. There's more than the problem. I just a contractor came over and we're talking about staining the new deck pad that we've got out there. There it is, all clean. And he said, well, we're gonna wash it down. It's power wash it down. So he came over yesterday to do it. He calculated the X amount of time to do it, and it took him 3 times longer to do that because it just wasn't coming off in certain parts of the older parts inside here where I'm sitting. So that we not only had to do the power washing more, but we had to change the stain color that we're going to put on there to compensate for what's going on. But that was part of the plan, and he had set that expectation. If this happens, or if this happens, then we're going to have to do this. But if this happens, or this happens, then we're going to have to do that. So we already had that all worked out. So I'm not surprised. The price of the job went up a few $100s because there's other stuff that he's going to be doing. But that's okay. That was factored in to the plan that he and I made as to the work that I needed for him to do. So if we're going to do that with our time in bidding jobs for somebody else, or working with somebody who's bidding a job for us, why can't we do the same thing in our trading? It's far more complex in trading than it is in just bidding a job for somebody throwing some stain down on your deck, or even building your garage or something. That's their problem to figure out the weight trusses and all that other shit that goes on. You say, I want a 40 by 40 barn and 2 floors, and I want windows here and windows over here and a concrete floor. And then it's contractor's job to quote you and to make you aware of anything that comes in to play that may change that quote, and you agree to it. That's the best you can do. In trading, it's the same thing. We're on a probabilistic thing, just like that contractor would be on at that time. You have your 3 lots. You're making probabilistic estimates through your entry analysis as to what your profit, average profit should be when you have a winning trade, in order to compensate for the losing trades, but you're just not getting that. So where's the problem? Sometimes I can answer that in an email, and sometimes I can't. One solution to a question is not going to be sufficient to really help you. I'm an educator. I'd love to help you. If you think that one answer to that one specific problem is gonna solve your problem, then why weren't you able to figure that out? So there's more behind it than that I could probably help you out with. Look at your situation. If you're getting to the point where you're trading the 3 lots and you're ready to go up, you might want to just chat with me a little bit about some of the things that you should be aware of as you're going to be migrating your success forward from this point on. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.